This video is going to piss a lot of people off, but that's fine, because if I have to annoy some people to save them from losing thousands of dollars, I won't lose a minute's sleep over it. Day trading sucks, and you will lose money. Watch this video to the end if you're even thinking about day trading. It could quite literally save you from the biggest financial mistake of your life. In March of 2020, E-Trade financial investors opened roughly 260,000 retail accounts, a record-breaking amount that topped every other full year of new accounts, all in just 1 month. It was an interest in investing that hadn't been seen since the dot-com boom days during the late 1990s, when people were eager to scoop up shares of just about any internet business on the stock market. But this time, the sudden fascination with DIY day trading wasn't born from a massive technology boom. It was born from boredom, as billions of people around the world were isolated at home during the early days of the pandemic. Digital hangouts on Twitter and Discord quickly morphed into virtual trading desks, with investors using online platforms to trade tips, hype up stocks, and cheer each other on in the quest for making a quick fortune. Day trading became the new must-watch event among a population starved of basically every other type of event. It filled a void left by the absence of professional sports, travel, and the conclusion of Tiger King. More importantly, it was fueled by the idea that the stock market belonged to everyone, and anyone could jump into this world that was previously viewed as elitist and secretive. But we are now over 3 years from March 2020. And it still seems like everyone and their mom is trying out day trading. But how many of these people do you think will ever make any real money? Let's be clear. When I talk about day trading, I'm not talking about people who have a Robinhood account they invest $100 in every month and make a few trades in their spare time for fun. In this video, I'm talking about people who buy and sell stocks strategically during the trading day in order to profit from rapid fluctuations in prices. Day trading typically occurs in the stock markets and on the foreign exchange market where currencies are traded. Unlike traditional investing, day traders take on a ton of risk daily. This is mostly because they are working to make money in the very short term, not over many years or decades, so they don't have much room for error. That's the reason why most professional money managers and financial planners don't advise day trading. It's just too risky. With that being said, professional day traders are usually well established in the financial industry and have in-depth knowledge of the marketplace and trading strategies. They are working with a large amount of capital that allows them to capitalize on daily price movements of fractions of a penny. Most professional day traders work for large financial players like hedge funds and the trading desks of banks and other financial institutions. They have spent years learning the ins and outs of trading strategies and have developed a personal style of trading that is reliably successful. Well, I wouldn't say it's very reliable, but at least it seems that way to the trader. Even the most respected traders are still constantly making extremely risky decisions that could lose them millions of dollars. So how does someone sitting at their laptop at home day trade? It's actually pretty easy to get started. Much more difficult to actually make money, but I'll get to that. Individual traders in the US, working from home, use an online broker like Interactive Brokers, Robinhood, or Webull to open a trading account. Most online brokers offer simulated trading so you could practice before you risk real money. Day traders also need a trading plan, built on knowledge of the market and several trading strategies to help them make multiple trades per day. The goal of day trading is always to complete your trades within the market day. So successful traders pay keen attention to financial news, market psychology, and trends. They often use various financial news services such as Seeking Alpha and the Wall Street Journal to try and gain an edge on their competitors. In theory, anyone can open a trading account and begin day trading. But should they? Why do so many people think they can day trade when professional traders spend years perfecting their strategies and learning technical analysis and still fail to make money long term? You can mostly thank the internet. We've entered an era where because so much information is available to us, we assume we can learn how to do anything using that information. And it's certainly presented like we can. A Google search of how to day trade pops billions of results. There's no shortage of guides, how-to videos, and bullshit courses sold by day trading YouTubers who make most of their money from selling these courses. All these sources promise to give you everything you need to get started with day trading. And many people do take this DIY approach. Reddit is full of "I'm a self-taught day trader, ask me anything" threads. YouTube has thousands of creators claiming to be day trading experts who say you can learn everything you need to know just from watching their videos. And people think if they just read the blogs, watch the videos, and try every guru's specific strategies, they might just learn enough to make some trades. And then they get a little cocky. How hard can it be? Just buy low and sell high, bro. And it all goes downhill from there. As I briefly mentioned earlier, there's a thriving market of online courses that claim to churn out successful day traders like well-oiled machines. Bear Bull Traders, Warrior Trading, Bullish Bears, Timothy Sykes, Trade Ideas, Day Trading Academy. I could keep going, but you get the idea. Many of these courses are very pricey, like college or university course pricey. Warrior Trading Pro costs $5,997 per year. Day Trading Academy will run you $10,000. And when you're paying so much for educational content, you expect yourself to come out of the program successful. The high barrier to entry created by the ridiculous price tags of these courses makes would-be traders think they'll have a leg up over all those self-taught traders out there. Perhaps this scene from The Wolf of Wall Street will drive my point home.
But you and me, the brokers, we're taking home cold hard cash.
The analogy I'm making is that these influencers make their cold hard cash via course sales, not actually day trading, which they lead you to believe. Despite the glowing success stories you see featured on marketing material for day trading courses, few students go on to become successful full-time day traders. According to Trade Society, 80% of all day traders quit within the first 2 years, and nearly 40% make a run for it after just a month. The average day trader loses money by a considerable margin after adjusting for transaction costs, and less than 2% of day traders are profitable each year. So there's obviously a massive disconnect between the number of people who are day trading and the number of people who are day trading successfully. Let's look at why. The first reason why most day traders fail is because they lack a proper plan. When many people set out to tackle day trading at home, they go into it with the idea that they can use their intuition, learn as they go, or simply try a bunch of different strategies until one of them eventually works. This is a huge mistake. Sure, day trading relies on trades that are happening second by second, but like any other investment, you still need a long-term outlook. If you blow through all your capital on day 1, there can't be a day 2. That's why successful traders have a well-thought-out plan they stick to. They don't let their bros hype them up into making a risky trade that goes against their plan. Day traders need knowledge of day trading procedures, latest stock market news, and events that affect stocks, and have a firm grasp on the deciding factors that they will use to decide what to buy, when to buy, and when to sell. Successful traders have all of this planned before they make a single move. Most day traders end up losing money because they fail to make trades that meet their own criteria. That's why successful day traders live by the adage, plan the trade and trade the plan. The second reason most day traders fail is because they don't have an edge in the market. As a solo day trader, you're going up against professionals with years of experience, access to the best technology in the industry, and who have access to a large amount of capital. To stand a chance in this market, solo traders need an edge. Simply put, an edge is a pattern in data that precedes market movement. Finding patterns that successfully predict movements is the key to turning a profit. The best day traders in the world are so finely attuned to these patterns that they make it look as if they are making decisions based on a hunch, when in reality they have so much experience and knowledge that they can make great predictions. Now, to contradict myself, I'm going to tell you that most day traders trick themselves into thinking that they found a pattern. In reality, their ego is writing checks their trading skills can't cash. But I'll go over that in more detail in my other video, where I explain why technical analysis is basically just a bunch of bullshit. Anyway, back to it. Professionals have access to powerful trading software and computers that help them find edges, along with access to trading desks for instantaneous order execution. Placing their orders before the rest of the market is able to take advantage of a price differential. To get an edge as a solo day trader, you'd need to invest in software attuned to your trading strategy, such as automatic pattern recognition, backtesting, and genetic and neural applications. And if your strategy involves tracking news stories that impact the market, you would need access to leading news wires, software that scans for important stories, and the ability to view constant coverage from major news organizations. Most people who embark on the day trading adventure simply aren't equipped with the necessary tools to give them an edge, and acquiring the tools can drain their capital before they're able to make their first trade. Let's assume someone has the resources and the knowledge to day trade. That still doesn't protect them from the next reason that causes most day traders to fail. They let their emotions get in the way. Day trading comes with extremely high risk, and the amount of capital needed to make real profits means you're likely investing enough money to make you uncomfortable. Most successful day traders depend heavily on borrowing money and using the leverage to make profits. Not only are you at risk of losing your own money, but you could wind up in serious debt. Knowing all of this and approaching day trading with a clear head focused on sticking to your trading plan is a lot harder than it seems. Many successful traders only make profits on about half of their trades, but they make more on their wins than they lose on their losses. Accepting that and being comfortable with that approach takes time and experience. New traders are more likely to see a loss and panic, toss their plan, and make a decision based on emotion instead of logic. If you've ever watched someone lose substantial money at a casino, you're familiar with the emotions that set in over financial panic. At a casino, they continue to feed the slot machine or place bets, hoping that the next spin or hand is the one that puts them back in the green. From the outside looking in, you want to scream, "Stop! Go home!" But in that situation, a person losing money can't bear to walk away. The same is true of many would-be day traders. Instead of stopping, adjusting their strategy, and taking time to learn from their mistakes before the next day, panicked newbie traders execute trades they weren't planning on, hold their positions overnight in the hopes of recouping losses the next day, or continue trading beyond their financial loss limit. Reason number 4 most day traders fail is that they don't treat it like the full-time job that it is. Too many people think that day trading is something they can do as a side hustle, when in reality, successful traders spend hours each day watching dozens of ticker quotes and price fluctuations to spot fleeting trends. Like any other skill, day trading requires practice to get good at. Again, in my opinion, after a certain point, successful day trading is based more on luck than actual skill, since patterns in short-term trades don't usually exist. But practice can at least reduce your chances of making careless and generally stupid mistakes. And an hour here and there is not sufficient. You need to be all in all day for months before you begin to even have any sort of grasp of the market. Instead of treating day trading like a hobby that can make money, would-be traders need to treat it like a startup. It takes capital, time, commitment, and lots of room for error and learning. Successful traders invest the time upfront in studying the market, different trading strategies, and getting comfortable with various trading charts and patterns. They also invest in their setup, with a dedicated trading desk, fully equipped with news services, real-time data, and brokerage services to effectively carry out the trading plan. Most importantly, new traders need to be willing to invest the time and money needed to become successful. Which leads us to the number 5 reason most day traders fail. They don't have the capital or stamina to outlast the learning curve. Day trading is very difficult to learn. There's no getting around that. There's a reason most financial advisors don't mess with it. You can always choose to start out small and slow, trading only what you can afford to lose. But the problem is, you're going to lose. And day after day of repeated losses depletes capital. The wins you do get won't have the leverage needed to make you notable profits. That's why people fall into the trap of going off plan or investing more than they should, and then blow through their capital before they've had sufficient practice. The truth is that very few people have the mental fortitude or time available to take the truly slow and steady approach of months of small trades to perfect their strategies and hone their edges. Even with huge amounts of capital, day trading requires an incredible amount of stamina. It's like taking a different version of the SAT every single day. You can study and learn all the question types, the strategies to make the best guess on questions you don't know the answer to, and have a killer grasp on all the curriculum you learned in school, but each time that test is placed in front of you, it requires a level of concentration, confidence, and stamina that is simply exhausting. Unless you've sat at a training desk for months, you can't imagine the grit that is necessary to dive into the unforgiving world of trading day after day. For most people, a few weeks is all it takes before they throw in the towel and decide to try a different approach to becoming fabulously wealthy. But day trading just isn't a great way to do it. And the reason is simple. Day trading requires believing that the stock price reflects everything you need to know about the company. And this is just plain wrong. To understand why, check out this video on your screen. Click the video, and I'll see you there.